Hi traders, and welcome to the technical analysis market wrap on the 23rd of July. So we finally saw the volatility return to the market this week. We saw some big moves on some of the majors and the indices. Even though they were a bit whipsawy, we certainly got enough out. So we'll jump straight into the charts and have a look at what we can find for today's trading and early into next week. So we'll jump here into the Aussie USD on the daily, and you can see here that we had the continuation all the way down to the 73.50 area, which is our target. It overshot a little bit, but look, that often happens when we have a big fall. We know that this is a really solid level. We've really ascertained that in the past now. So it's look, its last 2 days have tried to rally off this point here, so it's hovering around that sort of 73.80 area now. Probably going to find a little bit of resistance around that area. Ideally, in a perfect world, we'd see it pull back to the 20 moving average. Whether it actually gets up there before it turns around again, we can't really be sure, but ideally we probably want to see it hovering around this area, maybe just creeping up a little bit higher. Wouldn't mind seeing it around that sort of 74.20 area. You can see it's another good point of resistance there. We'll put a horizontal line. Wouldn't mind seeing that pop up to that area there. That would be ideal because it's another support and resistance zone, and also it might give the 20 a chance to catch up a little bit as well. That's coming down pretty quickly, so we might see it. If it takes a day or two to get there, or if it sort of hovers around this area for a day or two, that will probably be enough to bring the moving average down to it. But yeah, we'll see. I think the the new range is probably going to be down here. I don't think it's going to be going up anytime soon. It's certainly not giving us the indication that it's going to, and quite frankly the Reserve Bank doesn't want it there anyway. So we will look at trading it in this new zone now. It's going to probably form this zone around that sort of 74.50 to 7300 area. We should get some good scalping opportunities in that time, so hopefully what we want to be looking for is opportunities just to scalp off the resistance and down to the support again. I'm not keen on taking it any lower until we get an absolute continuation, and that means a break past this level. So the only reason we're going to be going down to a 72.50 or a 71.50 in the next target is to see a daily close below the previous low here. Okay, so obviously still got a bit of work to do there, but in the meantime we can definitely play the reversal patterns at the resistance zones and also off the support. So that gives us a pretty good range. Scalping only for now. We've seen the good move. All right, so let's move on to the US dollar CAD. This one's a funny one. Look, it's obviously been trending up very, very strongly, and it's found its point of resistance, which is pretty much where we would have expected. It actually went over, really. I mean, the point of real resistance was at this level here, around that sort of 126.20. That was our target, and again, this one overshot. It just went straight through the 200 moving average and all of that resistance there. But as quite often is the case, when it does blast through and overshoot, it comes back down just as quickly. And you can see now we're trading back in that really, really congested zone here at around that sort of 125.60 area, so anywhere between 125.50 and 126.20. Look, that's our target again. It's giving it the moving average a chance to catch up, there's nothing wrong with that for sure. If the 20 moving average gets a little bit closer, we can look at reloading this position for the long again at around that sort of 125 area, anywhere between 125 and 125.20. But what you want to see is a change of trend on a smaller time frame. So I wouldn't be just taking that if it touches it. You want to go back down to probably a 1 hour chart, look for that series of higher highs and higher lows, or even a 4 hour, but more than likely it's probably going to happen on the 1 hour, and that might give us enough power to actually get up to those highs again. But again, we want to be waiting for just a little bit more. It is at almost a support level, but it is kind of in this congested zone, so it could probably drop a little bit further. It's one of those ones where, look, it might go without you if you wait and be a little bit more inclined to wait for the pullback. But like I said earlier this week, it's one of those things where the stop loss is going to be very clear on this trade. Like, the stop loss is going to be just below the last swing here, and whether you actually trade it right now and let it come back a little bit, or whether you wait for it to come back down and trade it around that 125 and have that 20 moving average support you there. The only difference is you're going to have the exact same stop loss, but the great thing about it is you're going to be able to put a bigger contract size on without increasing the risk. So any move up then of course is going to be a bigger benefit because you're going to have a bigger size trade on, and you're also going to have the same stop loss. So realistically, it's a benefit to actually wait. Sometimes you miss them, but if it does come back, you will be a bit happier because you'll be able to get more on. So, but still a good trade. For it to basically short off now, to go shorter, it needs to test the 126.20 from below. and the 200 again, and if it reverses there and makes a new low, then it's changed the trend on a daily time frame, and we'll be looking for shorts again to the key support zones down around here. But yeah, it's got a fair bit of work to do before it does that. So there's two ways to play it. We have to wait and see which one it does, but both of them are, yeah, the longest probably the better trade, but we just have to wait and see and let it play out. All right, we'll move on to the US dollar yen. Look, the US dollar yen has been fighting the uptrend. Obviously, we had that going for a good long time. Now it's trying to make a downtrend. I'm not totally trusting it, mainly because the US dollar strength is still there. We've got a lot of US dollar strength in the dollar index, which we'll look at in a second. So I'm very, very conscious of that, and I don't want to be jumping in on a short, even though we're getting lower highs and lower lows. So for me, it's probably a scalp more than anything else. You can go to the smaller time frames and look and trade these zones. You can see that, look, potentially this could make an inverse head and shoulders here really on the 4 hour, which wouldn't be a very bad thing at all. If it did that, it needs to close the 4 hour above this level here, so around that sort of 110. Ideally, the 110.50 would get it done. That way you've got, let me draw it for you. The inverse head and shoulders that I'm talking about is there. Okay, so you got shoulder, head, shoulder. So you want to see a close above this level. So probably at the 110.50 would be enough of a close above the inverse head and shoulder. That would be a great trade because that would be reversing that smaller time frame trend. And then you got very clear targets. Obviously, the distance between here and here. Let me draw that up for you so you know what I'm talking about. That is not what we want. We want this one here. All right, so the distance between the head and the neckline is what we're aiming for. And if we project that out, lo and behold, it goes into the previous resistance and the high. So at around that sort of 111.50, if you like. So yeah, the pattern makes sense with the resistance that's there for us already. So what we want to see is the only way we're going to do it, though, of course, is we're going to get a daily close, or a 4 hour close, sorry, above the neckline here. So above the 110.50. If we get a 4 hour close above the 110.50, that makes that pattern valid. And it also reverses that smaller time frame trend, and then we're looking for that point of resistance up here. So it could be a very good pattern, and it's certainly one to watch, but it needs to do it first. Look, it's found itself some support at the 50 and the 20 moving average on a daily, on a 4 hour, sorry, I keep saying daily, on the 4 hour, which is a very strong support anyway. Okay, we know that's pretty strong support. You can see how strong it's been all the way through, resistance on the way down. So, and we're about to get across to the 20 is about to cross the 50 on the 4 hour. So if we get that close above there, that pattern is valid. And then of course we go to the daily and look for the same target. We've obviously got the same target there, which is a previous resistance. So pretty good trade. The only way we would take this short, of course, is if it actually fails to break this neckline and starts making a series of lower highs and lower lows. But for me, the lower highs would have to, or the lower highs and lower lows would have to get actually below this level here. It needs to break down and get down further. If it does that, then we start looking for the shorting positions down to around that sort of 108.50. But again, got a bit of work to do. We let price action sort that out for us, and we trade what price action does. So yeah, not a bad trade either way, but the long is certainly more lucrative than the short, mainly because of the dollar strength. So look, let's go to the US dollar index. So the dollar index here, you can see that it's grinding its way up. It's failing to make really significant moves now in the last 3 days, because you can see we've had a negative day, we've had a positive day, and also we've had a pretty big bullish day here. Really, sellers tried to take it down, and you can see the bulls pulled it right up. I mean, it may end up closing almost at a hammer. Didn't quite touch a 20, but damn, it gave it a shot. And yeah, that's showing really significant strength. So it's testing the 93. It's already pushed past it for a little bit. We know that our target is up around that 93.30 area. If we're going for the bigger term target, we've already got the smaller ones. They've already worked out for us. So certainly showing the strength, and that's why I like the US dollar yen. Even though it's not completely correlated to it at the moment, there's enough evidence there to say that we need to keep an eye on it. So ideally, in a perfect world, this one will keep going strong, and that will get all of the US dollar base pairs where they need to be. Of course, the US dollar CAD and the US dollar yen and the like. The euro is the one that we're obviously going to look at and focus on for the short, because that's the opposite. You can see that's been doing the exact same thing, trending down, making lower highs and lower lows. The only thing that worries me about the euro a little bit is that its take profit is, or the last take profit is very close to where we're at now. Okay, we're only a handful of pips away, really, sort of about 50 pips. So you can scalp it down, and there's no reason that you couldn't scalp it, but you've just got to be mindful that the take profit is not very far away. It's eventually probably going to break this zone and going to keep pushing forward. But in the initial trade, what we want to see is the targets get hit. So You can see we had a big rejection there, which correlates with what we saw on the dollar index. A close below these levels here would get me in, and then I would be looking at taking profit around that 117.10 area. So only a scalp on this one. We should have already, you should have already got the good pips on the short, and we've been talking about it for a while. So now we go into scalping mode to get it to those final destinations, and then we reassess the situation when that eventually gets there. So that's what we're looking for here. If we're going to go long on this one, we need to see a series of higher highs and higher lows on a 4 hour at the very least. And it's got to be a significant lightning bolt too. It doesn't want to be a small one. We get that, and it gets past the 20 moving average on the daily, and we start thinking about maybe going long, but it's got a lot of work to do before it does that, and it needs to prove itself before we go jumping in on that bandwagon. So let's go over to the US 500, trying to basically replicate what it did last week, except on the way up. You can see that it's pushed up quite heavily. We had a sell-off early in the week, but you can see it's trying to get to those highs again. 43.78 is the current level and almost on its high. So close to, trying to get to the 4,400. I know a lot of people are trying to get it there, and it's trying to push through and grind through. Look, it might do it. To me, it's still looking like a market that's struggling to get past this level, regardless of what it's done there. I'm still watching this very, very carefully. I think I'd be looking for little shorting opportunities around this level, any sign of weakness on a smaller time frame, and I'd be looking for small-term moves. I don't know if it's going to just sell off crazily from here. I think it can probably hang around this area here until we see the weakness probably start to kick in around September or late August, which it traditionally does every year. So that's what you've got to really look out for there. You've got to make sure that you're waiting for the seasonals to kick in on this one. But we are in earnings season, and earnings are going to shuffle this around a little bit. And for that reason, I want to be sticking to only scalping opportunities so you can get in and out fairly quickly before any impact happens in the US session. So realistically, go to the smaller time frames, look for the changes of trend. As you can see here, 1 hour is giving you all the load ups you need on the 20 moving average. It'll be just the same on the way down. But again, I wouldn't be going for big moves down at this stage. Let it play out and look for those scalps into the key zones like the 20 moving average for starters. So 40 to 50 point moves are going to be the play here on the S&P 500. All right, we'll quickly have a look at gold. It'll be our last one. You can see that it's finding itself at a very, very strong support level here at the 1794. The downward target is 1765, and the upward target is about 1850. So they're the two zones that we're looking at. It's finding itself in the middle at the moment. You can see that the wicks are actually really kicking off the 1790 level here. You can see a whole series of daily wicks kicking off this level. It tried to push up, but sold down again. But again, it's struggling to get past this level here. So any change of trend on a smaller time frame, a 4 hour lightning bolt at this level here, and I'd be aiming in the first instance up to 1830 and then up to 1850 if you want to keep it going. Maybe take some off at this level here, and 1850 would be the final target for gold at this stage. But if we get a daily close below the 1794, so if we get a close that actually, on a daily, that actually does close below this level and breaks down all of these wicks, there should be enough evidence there to suggest that it's going down to the 1765. So that would be the trade on the way down, but definitely the up looks more likely, and it's actually the better trade because the indicators are giving us more of a signal that that's where it wants to go, and there's more power in that direction. And this is very, very strong roll reversal, this level. So it's no surprise to see all this price action here because of all of the resistance that it had here. So thanks for joining us. We've had a great week's trading. I think the moves have been really, really good. All of our targets have been hit, so now we can reset and have a look at them again on Monday if we get the follow through the US session tonight. So have a great weekend. I look forward to seeing you all next week.